Micron just dropped their fiscal Q1 2026 earnings, and damn, they absolutely smashed it. Record revenue, insane profits, HBM completely sold out through 2026, and guidance that's got Wall Street scrambling to raise price targets. Is Micron Technologies the next big AI winner? Let's find out. I'm Shubham, and today we are diving deep into the earnings statements, and we will also be comparing them to past quarterly earnings to assess the company's growth. Fresh Q1 fiscal 2026 earnings, which ended November 2025, recorded a $13.6 billion revenue, a massive 57% increase year over year. Net income exploded to $5.2 billion with EBITDA at $8.3 billion. Looking at the year-over-year revenue trends, in fiscal year 2023, they reported $15.5 billion in revenue. In 2024, that grew to $25.1 billion for a 62% increase. And for 2025, they're at $37.4 billion, marking a 49% rise, meaning their revenue has more than doubled in just 2 years. Key metrics include diluted earnings per share, which is a conservative way of calculating a company's profitability per share, came in at $4.6, which beat estimates of $3.8, along with cash holdings of approximately $10.3 billion. Why this explosion? AI data centers are gobbling up memory like never before. High bandwidth memory is sold out all through 2026. Every bit is spoken for with multi-year contracts. CEO Sanjay Mehrotra said demand is so strong they can only meet half to two-thirds of what key customers want. Supply stays tight into 2027. Now, to give you a clear picture of their progress, let's look at some quarter-over-quarter comparison tables. I'll pop these on screen for you to follow along. Pause if you need to digest the numbers. On the balance sheet, total assets have been continuously growing to approximately $86 billion in Q1 2026. Thanks to operational expansions, total liabilities are almost $27 billion in the same time period, which has decreased by 5% quarter over quarter compared to a 3.8% increase in total assets. The huge difference in assets and liabilities means they can pay all of their debt 3 times over if it comes to that. The current assets are at $29.7 billion, around 2.5 times their current liabilities at $12 billion, showing strong liquidity. Shareholders' equity stands at around $58.8 billion, which tells us what's left for the shareholders after all their liabilities are taken care of. Their current ratio in Q1 2026 is 2.46. Anything over 2 is considered rock solid, signaling strong short-term health, and their low debt-to-equity ratio means they are financing their growth more with equity than debt, which is always a good sign. In income statement, DRAMs drove bulk of the revenue, up 20% quarter over quarter. Gross margins improved significantly from operational efficiencies. Operating expenses rose 11% quarter over quarter with infrastructure expansions, and net income increased approximately 64% quarter over quarter. They have been on a steady growth with margins hitting 56%, up from 22.4% in fiscal year 2024. It doesn't get any better than this. Moving on to cash flow statements, operating cash flow, which is the amount of cash the company generates from its core business operations, came in at $8.4 billion in Q1 2026, which is the same as what they did in the whole fiscal year of 2024, explaining their massive growth. Free cash flow is at $3 billion, which in simple terms calculated by subtracting capex from operating cash flow, explaining their spending on acquiring and improving long-term assets. Before we conclude this video, please like and subscribe if this video is adding value. Alright. Now, the real bombshell you may ask, it's their Q2 fiscal year 2026 guidance. $18.7 billion revenue. That's another 37% jump sequentially, way above the expected $14 billion. EPS guidance is around $8.4, nearly double what analysts have estimated. CapEx up to $20 billion for 2026 to feed the beast. Calendar year 2025 is already a record year, and 2026 looks even bigger. HBM market is expected to grow from $35 billion to $100 billion by 2028, and Micron's grabbing a huge slice. Stock popped 10% post-earnings and currently hitting fresh highs around $275. Analysts have upgraded Micron to hit $400 to $500 long term. The only concerning thing is that it's currently trading at 13 times its EBITDA, which is a bit expensive. Bottom line, Micron isn't just recovering, it's becoming an AI memory powerhouse alongside Nvidia. If you're invested in AI, you need exposure here, but being cautious about its overhyped market cap is important. Thanks for watching. I'll see you in the next video. Until then, take care and invest wisely.